Good morning, good afternoon, good evening, wherever you may be. This is Sid Norris from Elliott Wave Plus, and this is the July 12 of 2021 edition of my quarterly premium plan webinar. We have these just every 3 months here, where I go over all the aspects of the premium plan and primarily our momentum algo that we have been continuing to improve over the last 3 years since we started this service 3 years ago, and some of the changes we've made to it. But this week, I really wanted to look at some specific tradable items. We send out a nightly report every night on about 20 different items. We'll take a look at what that report looks like. We'll also look at some statistics that we've put together, and also some equity curves, and that's the big difference on this webinar this quarter. Is I want to show you more equity curves of how an account has theoretically done over time by just taking these trade signals verbatim as they come through. So I'm going to put away this introductory slide and bring up Trade Navigator, which is this Genesis Trade Navigator is the platform that I use. And I'm going to turn off the video of myself so you can see everything that's on the screen. So this is an example of the algorithm, the momentum algo that I have been working on really continually for about 3 years and gradually improving. Oh, and one more thing before we get going. Let me show you our disclaimer. Don't want to forget that. Here's our disclaimer. You go to our website, elliottwaveplus.com, scroll to the bottom of any page and click on Terms of Service. Disclaimer right there. There's this disclaimer. It's there all the time, so please go there and read that in full. If I were to summarize it in one sentence, it would be there's risk of loss in all trading. Additionally, want to make sure that you're aware that we are required by law to say that past results are no guarantee of future results. And this is something that's just required that we include in our disclaimer, especially when we're speaking of automated trade signals. So here's the algo, and I'll just go over very quickly some of the basic components of the algo. The first thing is it uses an adaptive moving average. That's this line right here that lately in the stock market has been mostly green, and that's the indicator of trend. And if the trend turns down, it turns dark red. And if it turns back up, like as here, then it turns back to green again. So that basically, when that adaptive moving average is green, the trend is up, and the algo will only take long signals. It will not try to short while the trend is up. Conversely, if the trend is down and that line is dark red, then it will only take short signals. So that's the first component of the algo, and we just show you right there. All of our signals occur on daily charts, and we should show you right here what the settings are on that adaptive moving average. There are 13, 2, and 30. The adaptive moving average was created by Perry Kaufman, and he stated in his book about it some many years ago now that you want that third digit to be a 30 always on everything. But the first two digits, he found that a 10 and a 2 or a 10 and a 4, somewhere in there, it would be considered to be the typical settings. And so we backtest those settings along with a number of other settings that I'll go over here to make sure that over the last 3 years, and so we just got through re-optimizing all 20 of our algos so that they brought in the most profit dollars. It's you can optimize a number of different ways, but ours are optimized to bring in the most profit dollars. It isn't necessarily based on winning percentage or minimal drawdowns or anything like that. So we generally look for something that brings in the most profit dollars over the last running 3-year period. And so all of our algos have been freshly back tested and adjusted. The settings of the indicators have been adjusted to a back test period of July 2nd of 2018 through June 30 of 2021. So that's the most recent 3-year period. And then each algo we've designed just a little bit differently. Some algos are able to take sentiment into consideration. That would be DSI, or Daily Sentiment Index, which basically it's a stat that comes out every night. For instance, on the ES contract on the S&P, to let you know what the current percentage of retail traders that are bullish. So if it's at 90, if that's the number, then 90% of retail traders are bullish right now. And we'll go over that algo that takes that into consideration in just a minute. This one does not take sentiment into consideration because Daily Sentiment Index does not produce stats every night on the Dow Jones Industrial Average YM contract. They do on the S&P ES contract, and they do on the NQ contract on the NASDAQ. They do not on the Russell, the RTY contract on the Russell. And they don't put that stat out on any ETFs currently. So they only put it down on futures contracts, and we do find that to be a very interesting stat to utilize within whenever it's available in our algo. But on this one, it's not taken into consideration. So the 3 items that we back test for associated with the adaptive moving average that I was just showing you. There's 3 different settings that go into the adaptive moving average, and we only back test the first 2. We'll leave the last one at 30. And on this one, we look for a range of 7 to 13. Perry Kaufman stated that 10 was probably he found to be the most universal setting there. So we look to tweak it anywhere each side of 10 by 3. So anywhere from 7 to 13. And then also on this, he would often use the setting of 2, and we back test that anywhere 2 to 6. And what that does is that controls how how close the moving average is to price. Does it stray away from price like a 200-day moving average does, or does it hang pretty close to price, more like a 50-day or 20-day moving average? And the way this one is set up, I would say it would be pretty darn close, but not identical. It can't be identical because the math is different behind it. It becomes relatively close to, let's see what a moving average that would be pretty close to this particular setting on that adaptive moving average. So we'll go moving average, and we'll add a moving average onto the chart. And there's a 7, let's go with a 20 and see. And you can see it's somewhat like a 20-day moving average, but it's not exactly, because it has some additional math besides what a 20-day simple moving average has. But it's kind of like a 20-day moving average. At least that's the way it back tests best on this particular item. So I'm going to get rid of that. And then the other things that we test for This item down here, I call the Walter Bressert. Notice it has a WB in it right here. This is a indicator that someone in Trade Navigator programmed in based on Walter Bressert's work. He was an early pioneer in the area of automated trading and indicator development. And what the Walter Bressert really is a double smooth RSI. So you take an RSI with the standard settings, the default settings, and you put a 3-period moving average of that, and then you make a 3-period moving average of the 3-period moving average you just made, and you end up with kind of a double smooth RSI that's very similar, but not exactly like this. There's some additional math that went into this as well. So the thick line is called the Walter Bressert. And then we backtest for a moving average of the Walter Bressert. So in Walter Bressert's writings, he talked about how this indicator with a moving average crossover could give some very, very good trading signals on the market. And so you notice that when it's bullish, when you have a bullish crossover, it creates this green block. Well, that also shows up here on price. And when it's a bearish crossover, it shows a red block, and that shows up here in price. So the basic nuts and bolts of the system take those two items, the adaptive moving average and the Walter Bressert and a moving average that is back tested. In this case, it's a 10-day simple moving average of the Walter Bressert and crossovers. And we develop signals out of that. So if both of those items are in agreement, then it gives a signal to go long. The Walter Bressert is typically the quicker indicator. And so the way I designed the algo is it would wait till they're both in agreement. In other words, there's enough momentum buildup that it's time to take a momentum buy, like occurred back here in June 22. And then when the Walter Bressert crossed over here, notice that the adaptive moving average is still green, but the Walter Bressert says, well, wait just a minute, we're seeing a loss of momentum. And then on July 7th, it said, now get out of this and take profit. And that is part of an algo's job, is to take profit without giving too much of it back. But there's a beautiful thing that occurs in that scenario, and I'll show that, and that's the secret to the success of this algo. Just a couple other things that we backtest for is the size of this initial stop. We also backtest to see if at some point changing to a trailing stop would be beneficial. And amazingly enough, the way the Walter Bressert kind of operates, and it shows you where a loss of momentum is, most of the algos don't need a trailing stop that kind of acts like a trailing stop. So of all of the algos that we have, about 20 that we have on the nightly report every night, only about 4 of them can put up better numbers with a trailing stop. Most often, a trailing stop is not required with this system. And we also have one additional thing that we backtest for. And sometimes you get a buy signal that has an especially long candle. So these are daily candles. So the question you got to ask yourself is, if there was a big up day in the market and that created a buy signal, do you just get in right at market on the next morning? Or it's when the next daily candle starts? Or do you look for a little bit of pullback after that long of a candle, which would be typical, before you get in long? And we actually backtest, and we had the algo is smart enough now, at least on many of the 20 items we send out, to determine whether or not the signal candle was longer than normal or not, and if it was, how big of a retrace to look for before getting in. And so that's what this business is down here. But I was going to show you so I don't want to save that yet. I'm going to move that aside. The beauty of using the Walter Bressert to signal when you have a loss of momentum is that when you get a buy signal, like for instance, this buy signal came in right here on November 3rd of last year. That, as you may recall, on October 30th of last year, it was the beginning of a big move to the upside that's really still going on in the stock market. So 2 days after that, it got a signal to go long, but it was a long candle. That's what this little circle here it designated. And so in this particular case, it looked for a pullback of 200 Dow points, 200 ticks or 200 Dow points before it went long. Well, in this case, that turned out to be beautiful. And then it stayed long with the trade until the Walter Bressert showed a loss of momentum. Well, that ended up being an enormous winner. And this is the secret to the success of this algo is it has an open profit objective. And so it has an open profit objective when it gets into a trade. It doesn't just take profit at a fixed amount. Because if it does, and you get this kind of a breakout move, you're losing out on a big, big move. And that's the secret to the success of the algo. So there was a huge, huge winner. Yeah, I can email lots of things. My email address is sid@elliottwaveplus.com. So send me an email for any requests you may have. Notice also when it comes to shorting the market, the big downdraft that occurred from mid-February of 2020 through March of 2020, there was a couple of enormous winners there on the short side as well, just huge. And those big winners are critical to the system because there was so much downward inertia at that time. It waited until it got the Walter Bressert crossover in order to take profit. And it did it twice. I had two enormous winners at that time. And then sometimes the market is in kind of a sideways chop mode or, a much more noisy mode. And the algo can't do as much with that kind of market. So what I wanted to do this week, now that I've explained the way this thing works, is without doing any back testing, I'm not going to do any fresh back testing here. I'm just going to run, well, hang on. I must have another I forgot to uncheck one. So these are the settings that we were able to come up with on all the parameters. And so we're going to run the back test. And let's see, I may have changed. I'm going to close that and I am not going to save it. Hold on a second. I may have changed one of the parameters. So I'm going to open it up again and edit the strategy. And I'm going to run the back test based on the settings. Yeah, there's the proper settings. So what you'll see here is how well this item did over that 3-year period and some statistics about it. And you'll notice that we also take those statistics and we manually put them in these informational boxes that are on the screen. So this is the results of a back test we did on July 1. It's a 3-year back test. There were 68 trades, 36 winners, 32 losers. The average winner was $4,334, and the average loser was $1,239. It's hard not to get excited about that kind of performance, especially when it comes to the average winner being more than 3 times the average loser. This is how the open objective, profit objective that allows it to, if it's a big breakout move, to catch all of that move is the secret. Is the secret sauce. It's the reason it does so well, because on these momentum algos, I've been doing this for 3 years. I've done tons of optimization and backtesting, and about 1/3 of all trades are big breakout trades. And on this algo, they're big home run winners. About 1/3 of the trades close with a small profit or potentially a small loss in a kind of a sideways market. And then 1/3 of them get stopped out with the full size of the stop. But the secret is that the size of the stop is much smaller than the size of the potential winner. And that is why this algo was able to bring in, had the settings been in place the way they are right now for the last 3 years, it would have brought in $116,000 worth of profit, trading one YM contract at a time. And that's starting with an account size of $19,000. Now, if a person was going to trade, didn't have that much money in a futures trading account, but they wanted to use these signals, they can do so with these. They can take these identical signals here and use the MYM micro E-mini contract, which is 1/10 the size of the YM contract. So that would require an account size of only $2,000. And the average winner would be 1/10. It would be $433. The average loser would be $123. So on and so forth. The fixed stop size wouldn't be $2,800. It would be $280 that you would risk on each trade using just one micro E-mini at a time. So it all depends on how big your account is. And with these relatively new micro E-mini contracts, you can get as granular there as you want based on your account size. Another really interesting thing about this particular back test is that it does not it does not figure that you're trading more and more contracts as your account size grows. It's just figuring one contract at a time. So I'm going to run that back test one more time. Here it is. And here's the additional thing I'm going to show you this week on a bunch of items. We're going to run through these items is the equity curve. So on the equity curve on the Dow Jones Industrial Average, had you started this 3 years ago, there's the amount of profit that would have started piling on over the last 3 years. And this is one of the best equity curves you'll ever see because it's darn near a straight line. It's very consistent in its ability to continue to put up numbers, profitable numbers, and it doesn't have these big periods of big drawdowns. Now you might say, well, that's because the market has only been going up lately over the last 3 years, and that is not correct. Over the last 3 years, we've seen a couple of massive pullbacks. The one in the first quarter of last year was 38% crash in only a 5-week period of time. And so I'm going to show you so this algo, if you take all the long and the short trades together, brought in $116,000 theoretically over that 3-year period. If it only took the long trades, it only would have brought in $65,000. Now the winning percentage would have been a little better. It would have won almost 2 out of 3. And on short trades, the winning percentage was only 40%, but it brought in 50 grand on the shorts. And that the reason for that is because when the market lately takes a downturn, it is often a very aggressive plunge that happens very quickly. And because this has an open profit objective, it can catch big winners on the downside as well. And so when you put all of that together, and I could even show you the equity curve if you only took the longs, and the equity curve if you only took the shorts. They're both good. But when you put it all together, it creates a really smooth equity curve. So that's how it works on the Dow Jones Industrial Average. Let me show you a spreadsheet that we're going to make available to you. We're going to make a blog post tomorrow, and you'll have a download link where you can get a hold of this spreadsheet. And this spreadsheet allows you to sort. It's a live Excel spreadsheet that allows you to sort based on a number of parameters. And I'm going to make it where you maybe get as much of that on the screen as possible here. And so one of the things you can sort by, and probably the one that we've designed for, is the return on investment over 3 years. So what that one is we take the account size required, and that is determined by what account size is the minimum account size I could start with, and I could take all these signals, and I never would get margin called. I get close, but I never would. And so we can sort on return investment. So you can see there's the worst return on investment to the best. Well, obviously we want to look at what brings in the best return on investment, and the Algos for the Russell, the Dow Jones Industrial Average, the German DAX, the NASDAQ, and the S&P were the top 5, all stock market items. So the Algo really does well on stock market items, but it also does really well on gold, the euro, and the US dollar index, and the Aussie. Now, some items down here, like it can't trade the Canadian dollar worth a darn. And it doesn't do that great on emerging markets. But we're going to take a specific look through the equity curves on all of these stock market items. And I also want to look at gold, the euro, and the US dollar index while you're here. But all of those have brought in return on investments above 300% over a 3-year period, theoretically. And that means that if the settings that are in place now were in place over the last 3 years, that would have been how well it would have done. Now you might say to yourself, but you re-optimize every quarter, so that's a little bit deceptive. And so I don't want to be deceptive. I'm going to be completely truthful with you about how we do all of this. But I can tell you this much: on virtually all of the stock market items, the top performing items I just showed you, almost none of the settings were changed due to the re-optimization we just did. They're the same now. They're effectively the same now as they were over the prior quarter. So they've been running really close to about the same for the last 6 months. And also I will say that for the most part, most of these algos, I don't have to change radically the settings from month to month. There are some subtle changes, and when I make the subtle changes, the backtest shows a little better, but not that much different, substantially different than what it would using the old setting. So let's look at the S&P. Before we look at the S&P, there's quite a few people in the room now, and I would like to ask everyone in the room, if you would please, if you would be so kind, list the top maybe 3 items that you like to trade. And so the reason I'm asking this, so just throw them into the chat. The reason I'm asking this is I want to get an idea of what the people that, for instance, I sent out this email to everyone that looks at our blog, that's subscribed to look at our blog, and everyone that's a current paying subscriber, and also to everyone who used to be a paying subscriber. So we have an ES, we have net gas, silver, gold, so more of a commodity person, and then there's Tobe is mainly stock market, but also metals, and then there's an NQ. Anything else? Is there anybody that mainly trades ETFs and their main interest is in ETFs? That's the thing I wanted to get at, because, for instance, on the S&P, we send out these signals every night, and they're based on the futures contract. But there are ETFs like the 2 times bullish S&P ETF, the SSO, that I do have a backtest at Algo ready to show on that, if this would be an important item, and if you are either a paying subscriber or you're highly interested in becoming a paying subscriber, I would like to accommodate you. The thing we could do more with is ETFs. And so, for instance, I've got a complete backtest ready to go on SSO and SDS. I know that there's a lot of interest in Dust and Nugget, and I am certainly one of those people that's super interested in trading Dust and Nugget ETFs. The only problem with those is they switched from 3 times to 2 times back when the big crash happened in the first quarter of last year. The 3 times, they were unable to hang with a 3 times leverage thing, so they switched them to 2. Well, that really just kind of screwed up the back test, the 3-year back test, pretty bad. And so mainly, and I don't think there's any gold miner ETFs that have been 2 times the entire time consistently. But I would love to be able to do but whatever it is, it needs to have stuck with the same thing. Either it's been a 2 times the entire time or a 3 times the entire time. I don't know for sure, Mayron, about what currently is out there on 3 times. There was a whole bunch of 3 times ETFs that just either switched to 2 times or they just stopped back in the first quarter of last year, because they just couldn't. Their algorithms were unable to produce an authentic 3 times arrangement, because the market was moving so very fast. So that's one of the reasons I kind of got away from ETFs, but I'm willing to go back if there's a tremendous amount of interest in ETFs. And obviously on the stock market, there's lots to choose from. So here's a nice 2 times bullish and 2 times bearish ticker symbols that have been around a long time, and so those are signals we could add back in. If you're a paying subscriber or you're really interested in subscribing and you really need that, send me an email, make your wishes known, and we'll try to accommodate you. Let's see. Getting back to, I want to show you some. Let me get back to the S&P. I want to show you the equity curve on the S&P really quickly, and then we'll start moving through pretty quickly. The gold algo has really been doing a good job. I want to spend a little bit of time on that. But I'm going to switch back, and I haven't shown you the equity curve on the S&P. These equity curves on the ES contract, the YM, the NQ, and the RTY are all pretty darn good. Really smooth, and moving from the lower left to the upper right really smoothly. And so we're going to look at the ES contract. This particular one is able to take into consideration the daily sentiment index. That's the current percentage of retail traders that are bullish. A lot of times when the retail traders get all on one side of the boat, and for instance, they get up above 90 on a reading on DSI, that often has marked at least a warning that we're moving into, a top in a corrective period. And so what I do with the daily sentiment index, when I have it available on that futures contract, is I will back test for a threshold. And in this case, the thresholds are 6 and 87. If the DSI is over 87 on the ES contract, based on back testing, the algo will refuse to take a new long signal. So, and that is shown right here by this thin red box. So had a buy signal occurred inside that thin red box right there, it would have refused to take a brand new long signal. Now, if it's already in a long signal, which often it would be in that case, it doesn't change course. It doesn't change what it's going to do anyway. So here's the last buy signal on the S&P came in on June 21, and that was a limit buy. It was a long signal candle, so it waited for a small pullback, not very much, based on back testing, only 3 points, 12 ticks, 3 S&P points, and it got long, and that's the most recent signal, and it was a winner. But then on July 6th, it got a crossover of the Walter Bressert, and in this case, a 3-day moving average of the Walter Bressert. That's based on back testing on this item, and it and it exited with a very nice profit there. And that right now it's flat. I'll have to say, depending on what happens over the next 24 hours, it's possible that this algo will produce another buy signal. I'll show you. The streaming is off. So the last candle you're looking at right here was today's futures candle, but now we're into a new day on the futures, and there's a new candle forming. And the reason I had the streaming turned off is on this new candle, it's probably showing a buy signal. Yes, it is. But that buy signal isn't legitimate until the Tuesday, the current candle, which is the Tuesday candle, until it closes. So if it closes about at the current level or higher by this time tomorrow or a little earlier, yeah, we're probably going to have another buy signal on the S&P on this algo. And that's the way momentum algos work. They continue to chase. They really don't care how overbought something is or overvalued. Now, this one won't take a new long signal if the DSI is above 87. We'll have to see how that, we don't know how the DSI is going to come out until after the Tuesday close. But so it might refuse to take it if the DSI, which closed today at 87, if it closes tomorrow at 88, it's not going to take that new long signal. If let's say we close a little higher than we are right now by the time this Tuesday candle closes, and that's why I turn off the streaming. We turn off the streaming when we take the screenshots, because they might show you a false signal that isn't going to end up being an actual signal. It isn't determined to be an actual signal until the daily close, which in the futures contract comes about 4 o'clock p.m. Central Time. And then we have to wait for the DSI numbers to come from Jake Bernstein's organization, and that usually doesn't come to us till about 6 o'clock p.m. Central Time, and then with the streaming off, we could show you the latest candle and whether we have a legitimate signal there or not. Questions coming in: is there value to tracking momentum on a leveraged ETF versus tracking 1x equity? The only value to tracking on a leveraged ETF is I would say it's not as valuable as tracking a non-leveraged item. But some people like to trade them, and they like to see the signals, and they like to see where to put their stop. And so that would be the value that we could add by showing some leveraged ETFs. But you're exactly right, Alan. Really, if you want to trade a leveraged ETF based on the underlying non-leveraged item, for instance, an index or the basic futures contract, that would be the preferred way to go. So the preferred way to go really would be to take these signals and then if you want to trade ETFs, trade them on an ETF, trade them on leverage ETF if you want to. You'll have to kind of guesstimate about where the stop would be if you did that, based on where the stop would be, you know, based on this, where the algo puts it. The placement of the stop is incredibly important in algo trading. If you use too small of a stop, you're just going to get stopped out too much, and it's all going to be an exercise in futility. If you use too big of a stop, you're allowing your losers to be too big, and it's going to hurt your performance. There's going to be a sweet spot in there where it's going to be perfectly okay to accept the occasional loser, but no bigger than a certain amount in comparison with how big some of the winners can be on that item. And that's what the algo completely takes care of. So I'm going to show you the equity curve on the S&P, and then I'm going to try to move forward quicker here and show you a bunch of equity curves. So this shows that the data range is correct, what the inputs were that we used. We're going to run it, and it brought $1,000 over a 3-year period of time. Here's the equity curve. Notice very, very good, but this year, starting in about March of this year, it's kind of stepped back just a little bit. And this is why, you know, when you can look at these equity curves, you know, I would have to say, if I were going to decide between trading the ES contract and the YM contract based on this, I would trade that YM. It has the better equity curve. Now there's the equity curve taking long trades only, and there's the equity curve taking short trades. You'll notice that what has been hurting the algo lately has been its attempts since about February of this year to get short. Its attempts to get short have not been working since about February of this year. Whereas if you were the longs have been working. So there's the equity curve on the ES contract, and now I'm going to move through very quickly and show you several more equity curves so you can see how you have a choice on what you trade, and maybe that your choice shouldn't be based on what you're used to trading. Maybe it should be based on what's going to give, what looks like it would give you the smoothest ride, or you know, what has a recommended stop size that is something you can live with, so on and so forth. So here's the NQ contract. Its last attempt to get long, believe it or not, on July 5, it had to exit that based on a loss of momentum on July 8 with a small loss. So let's see what the equity curve looks like on this, and you can see the DSI as it ended at an 89 today. It was at 91 back here. It's very, very rich. And the threshold on the DSI is 92. So if based on backtesting, if the daily sentiment index or the percentage of retail traders that are bullish is above 92, then it will refuse to take any new long signals as long as the DSI is coming in above 92. So we're going to take a look at this strategy. Everything looks good. We'll run it. Brought in 119,000 over 3 years, 51 winners, 45 losers, average winner 34.55, average loser 12.66. These are just great numbers. There's the equity curve, and as you can see, pretty darn good. There's the equity curve taking long on just the long trades, and here's where's the equity curve on short trades anyway. You know what? It may not have been taking any short trades. Yeah, it may not have taken any short trades during that time, and the reason is the the trend has generally stayed up pretty consistently, but you know, there's that equity curve did look very good. I can show you a number of other items, but I want to get down to, I want to make sure that I showed you gold this time. And it's possible in the NQ that it filtered out all of the short trades because the signal candle was long. It looked for a pullback and it didn't get a big enough pullback whenever it did get a short signal. So here's gold. And here lately, this gives you a real good idea of how well the Algo has been trading gold. It went short right here and just recently had one of the biggest winners over the entire 3-year period, and it was a short. Made $9,600 on a single contract, shorting it right there. And so the signal came in here to short it. And by the way, it also made nice money here on a long signal. And then right here, it attempted to get short. It got stopped out in all in one candle, and then it attempted to get short again, made a huge winner. And then down here, it attempted to short it, got stopped out very quickly, and then went long, and it closed out today. It's suggesting closing out the long position today with a decent but relatively small winner. And so you can see the size of the winners with these big green blocks is dwarfs the size of all of the losers shown in the red blocks, because the losers are they aren't allowed to be too large because of the size of the stop, which is back tested. So let's see what the equity curve looks like on this one. It brought in $82,000 over the last 3 years, theoretically. And notice it doesn't have a real strong winning percentage, 45%, 52 winners, 64 losers. But the average winner, 3192, the average loser, 1,300. So that is always the way this algo runs. And the equity curve, pretty darn good, pretty nice. Here's the equity curve on just the long trades. There's the equity curve on just the short trades. Amazingly enough, March of 2020, or maybe February, starting about February of 2020, it started making consistent money on short trades, even though the general trajectory has been to the upside in gold since that I would say March of 2020 low, at least until it got to August of last year, August 7th. That was the all-time high, almost a year ago now. So here's that March low. So there was a huge winner on shorting down into that March low. It took profit way down here, very close to the bottom. And then the next big winner was a long. Then it made another big winner on a long. Had a few alternated winners and losers for a little while during a sideways period, and then made money only on long positions going up. It would only take longs during as long as this adaptive moving average was green. And but lately, it's been having to make its money on shorts for the most part because the adaptive moving average has spent quite a bit of time red. And if it's red, it will only attempt short positions. So another really strong equity curve on gold. Just to show you very quickly, as a subscriber to our service, when you log in, I'm logged in right now, a number of these headings show up. And if you're a premium plan subscriber, you get a nightly report, and we send out an email that generally hits your email inbox shortly after 6 p.m. Central Time each night. And you click there, and here are the premium plan nightly reports. So here's the nightly Algo report that just came out tonight. My son Andrew prepares these every night for you. And so you get a screenshot of the item, of each item, plus you get a summary report in the form of a PDF. And so this PDF color codes where any activities might have occurred. So there was a buy signal tonight on KBE, the banking sector, that just hit. There was a signal to exit because we got stopped out of a buy signal on the 10-year bonds tonight. Gold, there was a buy signal on 7-2. It says exit the trade in profit tonight and go flat. So this, when it's yellow, it's an action item. Silver, that there was a sell signal on July 8 that got stopped out and is saying exit that position and go flat. And so those are the action items tonight. And so you get a nice summary report, and each summary report, it also shows what my current Elliott wave count is, what the Hurst Cycle analysis is currently projecting to be the direction of the market over the next few weeks and months. You know, where the last signal was, how that ended, and also it shows you sentiment, including if there's DSI, the retail sentiment available on the item. It shows you what the DSI is there. So that is the summary reports that premium plan members get. And they also get a screenshot of the algo. And also on the current positioning, commercials positioning on sentiment, which is important especially important on commodities, and what the current retail positioning is, and the spread between the large specs and the commercials. I've done more videos about that sort of thing, but you get also this sentiment screenshot in each of the tradable items to know kind of where things are, how the commercials are positioned as opposed to retail can be very important information. And crude oil, these are all current screenshots as of tonight. And that's the way it works. So the whole idea here is behind the premium plan is basically you want to, and I'm going to turn the video back on here. The idea is to give you information that you can look at very quickly, maybe over a 10-15 minute period, because most people only trade 1, 2, or 3 items at a time. And so you can check on those items, see if there's a new signal, see if there's something new going on as far as an action item like take profit, exit the trade, or change to a trailing stop, for instance. All of that information is shown in the spreadsheet as well as on the charts. And there's also other really important information that shows on the chart that you can look at. For instance, on gold, you look at the that chart. I had showed in the weekend webinar on gold that we were very likely within 1 day of getting a Walter Bressett crossover. And that actually did happen today on Monday. And when you get that and you're in a long position, it's saying exit the position and go flat. So I was able to predict that based on these two, the Walter Bressett and the moving average being very close to crossing over, and it was almost inevitable they were going to cross over the next day. So you get used to looking at these indicators. And then I also show you the daily sentiment index on each chart. And then this indicator down here below is awesome. It shows the difference between the current reading of a standard RSI, that's the black, and the money flow indicator to let you know where the volume. The money flow indicator is essentially a standard RSI that is goosed by volume. So it lets you know, is there volume behind the current move, or is the volume lagging? And so we will manually place these pink lines at a point where the RSI and or money flow indicator were overbought in this case. And as soon as they exit overbought territory, if you look at that, that can also be very meaningful information about, whoa, this thing's losing momentum here, looks like a short. And then down here, with this green zone, meant that the money flow indicator, in this case, was oversold. And when it made its way up out of oversold territory, that was kind of a warning that this market looks very bottomy right now. And could rally for a while. And that was a little bit early in that case. It was kind of an early warning that there could be a bottom forming, a temporary bottom. Tobe says, suggests adding a Bitcoin summary PDF each night. That's interesting. We'll take that under advisement. I guess we could show Bitcoin for premium plan subscribers. That's the kind of something that we include at a cheaper level, but yeah, we could also include that on the nightly report. We'll look at that. Is there any other comments, questions, anything before we wrap this up? I'd love getting the any kind of recommendations that we can look at adding for you. One of the things I was thinking about was the ETFs. Bitcoin is another one. Anybody else that's a current paying subscriber or somebody that would subscribe if we did something that they really want, we'd look. So just let me know in the chat before we finish up here. Deb says, any thoughts on the markets before over the next couple of weeks? Well, you know, part of what I do here is Elliott wave, and I'll associate Hurst analysis with it. Um, and I'm not sure this is really the venue to show you what I'm thinking on Elliott wave. It's, you know, the beauty of automated signals is they don't care about Elliott wave or Hurst cycles. They care about momentum. Um, but I think the stock market looks incredibly toppy right now. I will say that it looks overvalued. It, and it's continued to move up on lousy breadth, and these are signs that we get a pullback. I'll go as far as to say that right at the moment. Um, I have tried the algo on some grains. It doesn't work well there. That's the reason. At first I had every intention of including some grains into it, but it just doesn't work as well. Those items I think are too noisy um, and require too big of a stop in comparison with, you know, the potential profits you can get out of them. And so my algo just doesn't work well there, and it doesn't work well on everything. It does work well on most of the items that I include as part of our service, and that really includes a pretty wide swath of popular traded commodities, currencies, bonds, and of course stocks. Um, Anything else? Yeah, Richard asked for maybe some specific stocks, so like maybe Apple or something like that. And that is an idea I have rolled around a few times, and there's just so many different individual stocks. I guess if I was going to pick one, it'd probably be Apple. But maybe Richard, you have some that you are always interested in that you could throw out some tickers there. I don't know. Um, we do include XLE for large cap oil. I think is a really important one to look at. We include KBE for banking. We have GDX for gold miners. We show signals every night on all of those, including emerging markets. You know, here's the list. Like we do have some leveraged ETFs we do show on the NASDAQ every night. And then some currencies. And we are showing some ETFs on the S&P, leveraged 2 times bullish and 2 times bearish there. SSO and SDS, TWM 2 times bullish Russell, and UWM, it's 2 times bearish Russell. We include those. Bonds, ZN contract, US dollar index, and several currencies, the euro, the Aussie, the Canadian dollar, crude oil, DAX. So there's a lot there already that I think gives a nice selection. But yeah, I could consider a few of the highest volume stocks like Apple. I've thought about that one before. I'll probably go ahead and build an algo on it and see how that turns out. The thing about Apple is it'd probably be a long only algo. It's just trying to pick those spots where momentum has built up enough where it looks like it could continue for a while. It'd be kind of a long only algo, and I can do that. I've got that on, obviously, on all those ETFs. Anything else, guys? I kind of want to go see this Shotani hit in the home run derby. Hopefully he's still alive in the second round. I really haven't seen him hit yet. It's just a fascinating kind of Babe Ruth story there going on. How do I combine Elliott Wave and Hurst and Algo when making trade recommendations? Well, I can show you that very quickly, and I'll show you the example when it comes to gold. So my gold Elliott Wave roadmap on gold, by the way, on my YouTube channel some time ago. Now I put out, made a copy of the portion of my coverage on GDX that I did, and that was I put together that back in April. And so April 29th, and at that time I was calling for gold to put together a triple zigzag down into August, a W, X, Y, X, Z. And that was in late April. And here is my current gold roadmap that it's correcting in a W, X, Y, X, and Z. So ever since late April, this wave count has been working and working very well. A real telltale sign that we're seeing right now is a 5 wave down structure right here that looks like an A, and then this would be B of the final zigzag down for a Z wave of a triple zigzag. Notice I'm still looking at mid-August or early to mid-August, and based on Hurst. So this has been an incredibly accurate roadmap on gold. And this has been during a time where there was such bullish talk about gold during this time of moving up here, that I remember one article that said there's never been a stronger fundamental moment in history for gold. And that marked about the top of that. And ever since we've been moving down, and it moved down initially in 5 waves. So this wave count continues to be correct. So let's look at the, at least so far. Better knock on wood, but it's been good over a long period of time. And notice that the algo suggested shorting gold right here. I actually, before that Fed meeting that supposedly caused this plunge in gold, I had suggested that the Fed meeting, there was going to be a change in language and that it was going to be negative. It was going to be positive for the US dollar, negative on gold. Said that in the webinar, and that turned out to be correct. A huge winner there. And then everything that's happened ever since really has been perfect keeping with my 240-minute chart. 5 waves down, it basically caught all of wave 3, the algo did, and now it was along here, but now it's suggesting getting out, and this is my wave count that it's going to move on down. So the cycle information, yes, is on the nightly PDF. And one of the columns on that nightly report is exactly what Hurst Cycles is projecting next. So yes, it's included in writing every night. Now, Hurst Cycle has been excellent on gold. I will say, not very good on the stock market. The stock market continuing to grind higher and higher and higher, and give almost no pullback greater than 2 or 3%, going on a year now. Boy, that cycles analysis, I don't know of any Elliottian that's really called that exactly right on, or cycles down. So it's been just an odd animal as far as the stock market goes. But in some items like gold and the gold miners, it's been right on the money. And so when I have something that's working and working well, that's where I prefer to personally trade. And I'll leave alone an item that doesn't make any sense to me. That's the way I personally like to do it. So we're pretty much out of time here. If you have any further questions, please send them to me on my email. That's sid@elliottwaveplus.com. Would be happy to look at your inquiry. Take a look at our premium plan. Look at how cost effective it potentially could be in your trading. And that's the whole point of tonight is, in a market that doesn't make any sense, these algos are working. And the signals are generally coming out, and it's finding enough of these breakout home run trades that it just continues to work. So have a great rest of your evening. I'm going to stop the webinar there. Thank you so much. We'll be putting this entire recording up on our blog. Stay in touch with me. We will try to accommodate your requests if at all possible. Talk soon. See you later. Bye-bye.